No mai haere mai, I tūwharetoa mihi mai. E Ngāti Te Rangiita ki Aurua Nui, tēnā koutou. E ngā manuhiri, haere mai ki te kaupapa o te rā. E rangatira Dennis, kia ora. Haere mai ki te Te Matahiko, haere mai ki te Te Mihi uinuku kōpako. Ko o tātara te monga, ko tūtaikuri te awa, ko ahuriri te kāinga, ko James Kilty ahau. Ko kai whakahaere mātua o te Matahiko. Nō reira, tēnā koutou, tēnā rā tātou katoa. Good morning and welcome. Welcome to all of you here and to all of you joining us online on the webcast. That was a very short Māori welcome, a short mihi and a short pepeha by me to sort of take you through what I just said. I welcomed you to Te Mihi Uinuku Kōpako, which is the full name of the Te Mihi Power Station, named after the eponymous ancestor of Ngāti Te Rangiita ki Aurua Nui, on whose tribal lands we are operating. They are a hapu of the broader Tūwharetoa tribe, whose lands I also acknowledged in that quick opening. Then also introduce myself. My name is James Kilty, and I am the Chief Generation and Development Officer at Contact Energy. In Māori terms, I delivered a pepeha, so I told you about my maunga, my river, and where I'm from, which is down in Hawke's Bay, about an hour and a half south of where we are at the moment. That is my tūranga waiwai, my hometown. So it's a great pleasure to welcome you here. I'll start with a little bit of an introduction to me and to the other speakers. So I've been with Contact for a long time. I started with Contact in 2002. I joined from a law firm. I am a lawyer by training. I'm a recovering lawyer. It's been 10 years since I last practiced. I joined the legal team and was involved in a great deal of transactional work at the time. The industry was in its very early days, and there was a lot of M&A work happening and a lot of development at the time, and some scrambling around buying retail businesses and trying to learn how to be retailers, if you cast your minds all the way back then. And I've worked in a variety of roles across the business, in fact across the full spectrum of the business. And in my current guise, I am responsible for the wholesale part of the company, so the production and wholesaling of electricity and fuels, including more broadly our sustainability program and a lot of our stakeholder management in that context. The other speakers today will be Dr. Mike Dunstall, who's down here, who will speak after me. He is the General Manager of Geothermal Resources and Development, and Mike's been with us for about 10 years now, maybe coming up 11, I would say, yeah, coming up 11 years, and brings world-leading knowledge on the management and development of geothermal resources, and you'll see some of that on display later in the presentation. And of course, in the Q&A session at the end, you'll hear the unmistakable tones of our Mancurian CEO, Dennis Barnes, who's sworn not to utter a word for the first section. Exactly, you can't respond in a rare moment. Just the normal disclaimer for a session like this. We do want to talk about the future. We do want to discuss with you some views that we have about conditions now and in the future, and they need to be taken in that context, obviously. They are our current views, but this industry is always changing, our environment is always changing, and so they must be taken as simply our current views of the future. And that's our program for this presentation. I'm going to open up with some discussion around the wholesale market and our wholesale business. That'll be followed by a discussion from Mike on our geothermal advantage here at Contact Energy. And then I will return to talk a little bit about our geothermal options, and then we'll close out with a Q&A session facilitated and led by Dennis. Now, before we crack on with our presentation, one request, please, and that is to hold your questions for the end. I know that will be challenging for some of you. I know some of you well enough to know that you'll want to ask a question on every point that we discuss. If you could hold those off till the end, that would be very helpful. That way we'll capture them all with a mic, and the people on the webcast will be able to hear as well. If we try and do that through the discussion, it could get quite logistically challenging, chucking microphones around and making sure everyone can hear. So if you could just hold off, be patient, take notes. You've all got books and pens and ready to go, and we will address your questions at the end. So, to start with, I'm going to address these topics. A little bit around the environment in which we're operating, how we think about that, and how our strategy is born from that and sits with it, and indeed enables us to thrive within that environment. I'll also talk to you a little bit about how we've reorganised ourselves to enable delivery of that strategy recently. And finally, some wholesale market outlook comments. Really just raising some puzzles that many of you are probably familiar with, but some things we are puzzling over as we look to the future of our market and our business in that context. So, Contact. This is a little bit about the company. I'm sure most of you know this. We have a national footprint. We have around 570,000 customers, 11 power stations scattered around the nation, actually centred in 3 large regional centres, in fact. So our thermal assets generally centred in the Stratford area over in Taranaki. Our hydro assets down on the Clutha in the central Otago, lower South Island. And here at Wairakei are our geothermal assets. So we have a very strong regional presence. Our retail business obviously has a footprint that is nationwide as well. We are a major contributor, an investor and supporter of communities all around the country, particularly in the communities in which we operate. And our assets, particularly the renewable assets, are long-term. They are very long-term assets. We're here at Wairakei, which this year will celebrate its 60th anniversary, and we see another 60 years of sustainable generation from this field ahead of us. With that sense of longevity, of connection to the community and to the physical resources that we utilise and are stewards of, sustainability is part of who we are. Sustainability has become quite the buzzword. Everyone is trying to carve out their path on sustainability. For us, it's BAU. Our assets are long-lived assets. Our presence in the community is subject to the whims and views of the community, so we have to be a good neighbour and operator of assets. We have to be aligned with the views of the society in which we work. That connects us through to our customers as well. So every year we get a stakeholder council together, reflecting a wide range of our stakeholders, and we work with them on what we call our material aspects. What are the things that they are seeing in our environment that we need to be thinking about as part of our business and as part of our strategy? We work with those stakeholders to understand what's important to them. And an example of that, a recent example of that, is some of the work we've been doing with Ngāti Tahu. And that has seen us, Ngāti Tahu is the iwi at the Ohaki geothermal resource down the road from here. And we have been working with them on a range of projects, including working with them in Kenya at the request of the US Energy Agency to help KenGen understand how a business works with community in order to develop resource and maintain resource. And we received an award from the US Energy Agency for our work in that regard. So we work with our stakeholders on a range of projects to ensure that as we drive our business forward, we are balancing how it will impact on people, how it will impact on culture, how it will impact on resource, on the environment, and of course, how it will be economic for all parties going forward. An activity is not sustainable unless everyone in the chain is making a return. We are very, very clear on that. Some of the more visible signs of our leadership in the sustainability space you can see there. We have been adopting integrated reporting since about 2015. We were issuing sustainability reports for many years before then. We comply with the Task Force on Climate-Related Financial Disclosures. We are the issuers of New Zealand's first green borrowing program, and we are adopting science-based targets. They are targets around our own emissions, around our emissions intensity, and around transition of customers and industry to lower carbon fuels. And we see that theme around the environment and climate change all around us. There are many, many reviews at the moment and many new targets announced by the government, and the government is reflecting, in our view, societal view. As we talk to our customers, as we talk to our stakeholder council, climate change is on their mind. It is a very material issue for our stakeholders. And so we see that as a macro trend. We do believe that New Zealand will move to a lower carbon economy. We do believe that that will happen globally. And of course we've been on this path for some time at Contact. We've halved our emissions over the last 5 or 6 years and are in fact a finalist in another global awards, the Standard & Poor's Platts Energy Awards that are held in New York annually. We have been nominated for the Energy Transition Award for our work in sustainability and in reducing our own emissions. We have, however, resisted the urge to jump on the bandwagon of many things you can sign up to and be part of in this space. We've actually taken quite a number of months to work out our own views. We've worked with our stakeholders, we've worked with our staff, and we've worked with our board to settle on our own opinion on climate change and what it means for Contact and our business, the risks and opportunities it presents to us. And in summary, our view is that climate change is real and that humans are in fact impacting on our environment. We do believe the world will continue to pursue a lower carbon future, and we believe New Zealand is very much on that path, and these reviews that you can see on this slide very much reflect that. We also acknowledge that we are uniquely placed in New Zealand with our high level of renewable electricity generation to benefit from the abundance of renewable resources available to us. But we understand there are some caveats to it. We understand that our unique hydrological conditions make it quite challenging for the electricity market, for electricity supply to transition quickly to a lower carbon future. We equally understand that our trade-exposed industries have challenges in transitioning their fuel mix to a lower carbon fuel mix. Our commitment is to work with customers and to work with suppliers to try and find answers to those problems. We do not think it is easy, but we think there is a path if everyone can work together, probably in quite different ways to in the past. And those challenges really come back to those 4 circles that were on the prior slide, and in particular the one around economic returns. It isn't sustainable unless it's economic. Capital needs to flow to the investments that need to be made to drive a lower carbon economy, and it won't flow unless there is a genuine return to investors. So in that context, our strategy is clear. For now, optimising our customer and wholesale business to deliver strong cash flows. We increasingly see the 2 businesses, customer and wholesale, as having quite different characteristics and strategies going forward, and they are articulated on this slide. On the customer side, the customer business's future is to become a value and service focused retailer, connecting customers to solutions. That is a one-to-many business, a mass business. On the right-hand side, in the wholesale business, we will continue to drive innovation, make sure we are safe, efficient and reliable, and work with customers to find lower carbon solutions. All of which must be underpinned by ongoing transparency for you and for all our stakeholders and ongoing capital discipline. So for now, the focus remains on cash, on ensuring we are managing our cash well, or your cash well, even though the medium-term demand picture appears increasingly positive. Now is the time actually for cash and capital discipline. We do see a balanced demand and supply position in the country at the moment. Short-term conditions are just that, short-term. And we see, after 10 years of no demand growth, we see signs that demand growth could return, but it hasn't yet. We do not see material demand growth returning. We do have the fourth potline at the Tiwai Point aluminium smelter down at the bottom of the South Island coming in, so there is some demand growth there, but that is still at risk of efficiency gains and or demand destruction elsewhere. So now's the time for discipline. That said, in the medium term, decarbonisation could, I repeat, could drive an increase in demand for our product. We could see large-scale electric vehicle transport uptake. We could see industry switching to our fuel, our electricity, in order to lower its own carbon footprint. We do think further market-led thermal transition could happen. And we'll talk a little bit more about that later on. On the customer side of the business, regulatory settings are continuing to drive an intensification of competition. So retail competition continues to intensify for our customer business. You see up there 10 new entrants in the last 2 years. I think the total number of retail competitors is somewhere around 40 these days, 39, 40. In a small market like ours, that results in a very, very intense level of competition in that market, and we're certainly seeing that in our business. Likewise, as smaller retailers have entered the mass market end of the retail business, we've seen some of the larger businesses move into the commercial and industrial space. So we've seen an intensification of competition and a reduction in margin in the commercial and industrial sales business as well, all arising from an increase, a market-led increase in competition. So this is what we've been doing the last few months to accelerate execution of our strategy. In the customer business, we have moved our ICT team into the customer business to integrate into what Vena and his team are doing to move to a lean operating model, continue to drive cost out through simplified processes, through automated processes, and to transform the technology in that business to continue to lower cost. Likewise, you recently will have seen we have repositioned our brand to better reflect a low-cost digital retailer of the future. And we're getting good feedback from customers. I think Dennis made that observation last night. We are getting good feedback from customers that the brand is sitting more comfortably with the way we deal with and talk to our customers. On the wholesale side, we are striving for sustainable cost reductions balanced against risk. And we have good form there, and I'll talk to you about that a little more shortly. We are continuing to invest in lowering the cost of geothermal and strengthening our geothermal capability, and Mike will share some observations on those two strategic strands for you a bit later on this morning. And we are starting to work with customers in a more meaningful way on potential decarbonisation opportunities, helping customers think about and address some of those decarbonisation challenges that they face. In our continuous improvement program, we have delivered really strong results. Remember, our aim here is to produce sustainable cost reductions balanced against risk. And I would direct your attention to our cash costs. These are the direct operating and capital costs of operating the wholesale business. And you can see between FY16 and 18 a 25% reduction or thereabouts in cash costs, and targeting and on track so far year to date to deliver another 20 million reduction. So overall a 33% cost reduction across 4 years out of the generation and development business, the wholesale business. At the same time, you can see stable safety results and stable plant reliability and availability. So we are delivering cost reductions without impacting on our performance. In the decarbonisation space, there's a lot of rhetoric, a lot of sound bites. For our part, we're endeavouring to engage in a fact-based discussion with regulators and with our customers and with the market. And we see electricity as the solution, not the problem. A lower carbon economy in New Zealand will be enabled by electricity. Many of you probably know these stats, but New Zealand has a rather unique emissions profile, with over half or around half of our emissions arising from on-farm emissions, agricultural emissions. Energy emissions are about 40% of our annual emissions, but electricity is only 5%. And that is a highly unusual position internationally. And therein lies the opportunity for decarbonisation. And in fact, we would say the market has driven an improvement in those electricity emissions over the last decade, as we saw fuel costs rising, thermal fuel costs rising in the middle of last decade. Other fuels came in particular wind and geothermal, and substituted that thermal fuel, leading to a reduction in overall emissions from the electricity market. And I'm going to talk to you a little later about some thinking we've been doing around further thermal transition in the market. At Contact, with our large-scale commercial and industrial customer base, the existing relationships we have, and the capability we have, we think we're well placed to work with customers and help them puzzle over some of the challenges they have in looking at their own future fuel needs. None of this is particularly easy. The economics for trade-exposed industry around the country to transition to lower carbon fuels are quite challenging. Any decisions by customers are likely to be aligned with when they have major capital reinvestment decisions on existing fuel equipment and with a rising carbon cost. One of the things we think will be quite key here is the development of new energy management capability. And we've been investing for the last 12 to 18 months in developing our virtual power plant, what we call our demand flexibility platform. And we've trialled it with residential and in residences and small to medium enterprise, and we've now trialled it on our own large scale devices, major pumps and things down in Clyde. And it's passed all trials, and we are now marketing that technology. What that does is we place what we call a virtual power plant hub in a customer's facility. It is connected through to certain assets and can, via the customer's control system, control those assets. It is connected to our virtual power plant platform, which is in the cloud, situated in the cloud, as is everything these days. And that is connected through to energy markets. So it's connected through to demand response and reserves markets, and it's all automated. So as something happens in the market, it sends a signal to our platform sends a signal to customer hubs, or can do that, and operates the equipment, i.e. turns it off. And we think a combination of demand flexibility, of energy efficiency at customer sites, helping customers just use their energy more efficiently generally, some new technology, there might be some viable cases for some battery rollout and solar rollout on site, and a rising carbon cost. All of those things will accelerate the point at which genuine switching to electricity can occur on an economic basis. So we are exploring opportunities with customers. We are finding a lot of enthusiasm. Customers are genuinely worried about the future of about climate change and about the future risk to their business of using carbon-intensive fuels. Again, You go back to that overall sustainability approach though. It has to balance or integrate all 4 elements of that: people, culture, environmental impact and economics. And at the moment the economics are challenging. Nevertheless, we have seen signs of customers willing to take a leadership role and switch. So while we've been gearing up and organising ourselves to deliver on decarbonisation solutions for customers, we've continued to strive for efficiencies in our geothermal business. And in fact, Mike will talk to you a little more later on about some of the work we've been doing, some of the R&D we've been doing to drive these costs down in a sustainable fashion. I note that Mike leads, as part of his group, possibly one of, if not the only drilling team in the world whose sole focus is not drilling. They have developed some extraordinary techniques that have seen us extend the life of existing wells, existing assets by many years, and that has taken a lot of cost out of our business in the last few years and out of our forward CapEx plans. And Mike will, some of that IP is proprietary. Mike will hint at it later on. Interestingly, because I know that Mike's a humble man, we are getting shoulder tapped internationally for access to this intellectual property. So people are seeing what's happening here. Wairakei is the home of geothermal internationally, celebrating its 60th year, and it's still the leader in geothermal internationally. And you can see that cost coming out across this slide here. Like all renewables, once you have heavily invested up front, you put most of your capital on the ground up front, you want to then focus on absolutely optimising the resource and doing that at the lowest possible cost. And that's what this work that Mike and the team have been doing is doing up here at Wairakei and Te Mihi. I mentioned earlier that we have reorganised ourselves a little to accelerate delivery of our strategy. I mentioned the ICT team has gone into the customer team. The customer business will become a digital business over time, and so there's a natural connection of that capability. For us in wholesale, the commercial and industrial sales team has moved back into wholesale for the first time in many years. These things are cyclical, but for now, in order to help us connect more directly at a wholesale level with those C&I customers, the C&I team has moved back into the wholesale business unit. And that sees us look at the wholesale segment like this, wholesale revenues like this. So we have effectively, through an internal transfer mechanism, a fixed price variable volume contract through to the customer business, through to the mass market business. And whilst we as individuals absolutely love our customers, we have there is an emotional connection in my team to our customers. They love talking with their neighbours and friends about what Contact's doing and love hearing about what's happening in our customer base. From a financial perspective, that's what it looks like. It's a large fixed price variable volume hedge through the mass market business run by Vena, our Chief Customer Officer. We now directly sell with the commercial industrial sales team back in the wholesale business. We directly sell to C&I customers and manage the scale and shape of that book directly as of the last couple of months. And that likewise, that is a fixed price. There are a series of fixed price variable volume contracts with customers with price based off the ASX, obviously including margin and credit risk and service, etc. And we sell a number of CFDs, some direct to competitors, tier 2 retailers, and some via other competitors to support some large customers, large-scale customers around the country. And you will all know about our support for NZAS, New Zealand Aluminium Smelter, down in the bottom of the South Island. And the pricing there reflects volume, shape, and credit risk. And finally, we sell steam. We currently sell that over in Tauhara to a timber mill and to some smaller producers here at Geothermal, And of course, out of our Taupo cogeneration site, we sell to steam to Fonterra. We see scope for growth in direct heat, direct steam consumption, if industry can move to the resource. One of the challenges with renewable resources, of course, is you can't shift them. The business has to be on site. And so geothermal direct heat is in fact very cost competitive. In fact, can be developed significantly at a significantly lower cost to a thermal supply for customers. However, facilities have to move to the resource. So there's that capital cost that needs to be thought through. And we're working with New Zealand Trade and Enterprise Great Lake Taupo to work with potential international investors on moving facilities to New Zealand to utilise green fuel. And there is some interest in that. A little asterisk down the bottom there I must pick up. We do occasionally run a long position, and that slide does exclude our merchant revenue. So from time to time, when the market's in the right condition and our fuel's in the right condition, we will get length to the market and receive merchant revenue, of course. And you see that a little bit on the right-hand side there in the net exposed revenue, and that's last year's numbers, FY18. You can see we managed to get some. We had a couple of very deep dry periods that made it quite difficult to get a length for us, and we were a net purchaser in some conditions last year as a consequence of those deep dries. But where possible, we get length to high prices. On the cost side, you can see the components of our generation costs. See the direct cost there in the light grey colour. You can see our indirect operating costs, carbon costs, and so on. Looking forward, thinking about these costs, we think our direct costs are likely to be stable. We still have our continuous improvement program running. We run a online ideas hopper, and we've really harnessed the knowledge of our people. Most of the cost savings that we have delivered, going back to that earlier slide, most of those cost savings have come from ideas from the coalface, from our people who are working in ways and with systems that they wonder why we have to do it this way. And all we've had to do is given them the permission to point that out and a facility to lodge an idea. So we're finding with that online hopper, we call it the ideas hopper, people are putting improvement ideas in there all the time. There's several hundred in there at any given time. Other staff are then commenting on it and developing up a solution. And then at the sites, they are empowered in a decentralised model to just make the change. And we're seeing major efficiencies driven out of that work. So we're still running that program. There are still ideas, and we're still pursuing them aggressively to make sure we are making sustainable cost reductions balanced against risk. The larger scale ideas come to a central pool where Jackie Nelson, sitting down the back there, our General Manager of Operations, works with the team on prioritising those and deciding which ones get funded. Looking forward on our transmission costs, we do see upside in the post-2020 reset. Most of you will likely know this. We're likely to see a cost reduction for Contact in the region of $8 to $10 million per annum from our electricity transmission costs. Gas and carbon I will come to in a separate conversation shortly, but gas will be purchased in quantities required to meet demand. Pricing will reflect market conditions, of course, and carbon pricing will reflect market conditions as well, and regulatory conditions in particular. So looking forward, if that's the wholesale business of today that we've just been looking at, what are the issues affecting it? What are the puzzles to think about going forward? This slide sets out a range of demand outlooks that are published. Many of you will have seen these lines on a page in other presentations. We're very cautious about demand growth. We have, and I can personally say I have, a terrible track record at predicting demand growth. The whole industry is not good at it. And so we're quite focused at the moment on maintaining our capital discipline. The industry does have a history of a little bit of boom and bust. Prices move, there's thought, thermal prices move, there's thought of demand growth coming, and everyone's seeing curves like these on the page, and then everyone piles into large-scale renewable build, and the demand does not eventuate, resulting in poorer returns on capital to investors. For our part, we are very focused on maintaining our capital discipline. Current market conditions, if you think about it, with the various gas fields in the country struggling, with hydro lakes low, are just that, short-term conditions in all likelihood. They don't necessarily signal a need for any sort of investment in the electricity market at this time. We do, however, think that if there are genuine signs of demand growth, or if customers underwrite investment through direct contracting, there may be potential for development. And we'll talk about that a bit later. To the extent there is development, it will come from renewable resources in this country, in our view. That raises certain challenges. Challenges you'll be very familiar with. Most of the lower carbon forms of generation are intermittent. And in our own hydrological conditions here in New Zealand, that raises some big challenges for us. So our view is in fact that thermal generation will be needed for some time, in fact for a long time. This is not a short to medium term statement, it's a long term statement. Thermal generation plays an absolutely mission critical role in this market at this time, and we see that continuing. The challenge there is energy storage. It's the ability to, at a low cost and a reliable basis, store energy for long periods of time and then release it when it's needed and not otherwise. And thermal generation is uniquely placed to do that at this time. Maybe in the very long term, hydrogen or something like that, or large-scale batteries, and that technology will advance to a point where it can start to play some of the role that thermal generation currently plays in the market. But that feels like a very, very long way off to us at this time. So our view is thermal generation has a long life ahead of it, and it plays a critical role. And in that context, we would think that now's the time. Now's the time for New Zealand's gas market to be proving its worth and showing that it is reliable and flexible. However, recent conditions show that reliability has diminished somewhat. It's not clear to us whether that is a systemic shift, whether it's ageing plant and we're going to see a continuation of outages, or whether it's nothing more than one or two things that need to be addressed and we're back to the reliability of supply that we've enjoyed for decades here in New Zealand. And we are working with the gas suppliers to try and understand that, to understand the reliability of gas going forward. And in the short term, of course, we've seen that lack of reliability result in, and the low hydro lakes result in an increase in coal imports. And it does make us wonder whether coal's role, notwithstanding targets on earlier slides, whether coal's role will last a little longer yet in this country, simply because of its ability to be stored and applied only when needed on a reliable basis. Again, capital discipline here is needed. The gas market, looking at that forward supply curve, will be deciding whether or not to invest in further drilling, and they'll be deciding that in an environment with a great deal of regulatory uncertainty for them. Equally, renewable operators may seek to build into the white space on this chart. In theory, at least, the capital should flow to the lowest risk investment there. It should flow to the lowest cost investment, whether it's oil and gas drilling or a renewable build. We would encourage the gas market and gas suppliers to offer more regular and more transparent updates of reserves, and to tell us more about what they are doing to move reserves from 2p to 1p. That would be very, very helpful in terms of long-term asset planning and long-term market planning. In carbon, we are continuing to see costs rising. They have, of course, hit and are tracking around the current fixed price of $25. Looking forward, we think the ETS will ultimately be connected to international markets. It will need to enable competitive response from our own industries. We think ultimately that cap will be lifted. It's unclear to us as yet in the current review when that will happen, but the cap will be lifted, and so carbon prices are likely to increase over time. To give you a sense of what that means in terms of technologies, and you'll be able to then toggle around these numbers. At a $25 carbon price, our combined cycle plant over there in Taranaki is paying about $10 a megawatt hour for carbon. Used to be about $5. It was not that long ago. It was only $2 or $3. $10 a megawatt hour for carbon. Here at geothermal, at Wairake and over at Tauhara, you're paying under $1 a megawatt hour. In fact, you're probably paying about 40 or 50 cents a megawatt hour. It's quite a significant advantage of the resource here. And you may not have noted, but I haven't been talking a lot about renewables. I've been talking about low carbon generation, because not all geothermal is created equal. At our Ohaki resource, for example, 25 minutes down the road, that equivalent cost of carbon is about $9 a megawatt hour. It's a carbon-rich resource. And in fact, I believe up in Nafa, its carbon intensity exceeds that of a combined cycle plant. So it's a renewable resource, but with a high carbon footprint. So looking forward, we do believe the review will result in a lifting of the cap. We're not sure when that will be applicable from. We do believe the review will recommend a connection to an international market of some sort to enable more liquidity. And we therefore believe that that carbon cost will continue to rise. For our own position and covering our own risks in this regard, we don't take a long forward book on carbon. That is largely because we remain unclear about how much thermal generation we will have in our mix going forward. And the bulk of our emissions come from our thermal generation fleet. So we don't want to be long carbon units facing much reduced thermal operation. The one area where we do have certainty is in geothermal. Certainty of output and therefore emissions, and certainty of tenure here at Wairake and Ohaki. So if we look at opportunities to hedge going forward and potentially even look at reforestation as a form of risk management on our carbon footprint, we would size that to fit with our geothermal operations, where we have real certainty about their long-term operation. So with a forward gas forecast that's got a lot of white space in it, which suggests upward pressure on fuel pricing, with carbon costs rising, what does that mean for the future of our Taranaki combined cycle plant? And I'll just walk you through the economics of TCC here. These are all done in dollars per megawatt hour. So last year we reinvested in the life of the plant, adding what's effectively about 9,000 gigawatt hours of potential generation at that unit. Okay, so about 5 years of generation for the CCGT. And that came at a cost of around $50 million capital cost. At a gas cost, prevailing gas cost of $6, a carbon cost of $15, that delivers you a short run cost of $52. And to recover your OPEX and your sunk CAPEX, you need another $10 on top of that. So you're looking at about $60-ish to get a return on that investment. Looking forward to the next round of investment in that plant, on expiry of those hours, the costs are higher. The CAPEX costs are higher because the scope of the next outage has to be larger. It'll potentially be in the $70 to $80 million range in 2022. So that means to recover that CAPEX you need another $3.50 a megawatt hour. So it pushes the cost of the unit up further. And every plus or minus $1 a gigajoule on gas price is plus or minus the heat rate, 7,500. So $7.50 a megawatt hour, up or down, depending on the then prevailing gas conditions. Likewise on carbon, every $5 movement on carbon adds or subtracts $2 a megawatt hour. So our view on TCC is that it's very unclear as to whether a further extension of its life will be viable, whether the market will support that at that time. And the time at which we have to make that decision is probably 2020, late 2020, because you have to order all the parts and do all the prep work well in advance to enable an extension of life on a unit like that. It's a massive amount of work for our team over in Taranaki. So those decisions are coming up for us. 2020 in this business is not very long away, and we are thinking very hard about what that might mean for us. And if you go back to and think of that forward gas curve and the falling 2P reserves, you think that there is real potential for the market not to support the extension of life of TCC next time round. However, we will have more information. Time's a wonderful thing. Time's a wonderful healer. More information emerges. We get more clarity and certainty from the myriad of government reviews that are happening at the moment. We understand what, if any, change emerges from OMV purchasing Shell's assets here in New Zealand. We understand what the Interim Commission on Climate Change says and what the full Commission will be thinking about. We'll understand the electricity pricing review, and we'll understand the ETS review. All of these things are really key inputs into giving us more or less certainty over the future of that asset. And so we're basically in a watching brief. It feels like, I'm sure to our operations staff, it feels like an almost constant state around our thermal assets, a watching brief on the future of those assets. Now, if it is challenging to extend the life of TCC, if the market won't support that level of investment and get a reliable return, and if there is demand growth and or customers willing to underwrite investment, then we have a wide range of options here at Geothermal, brownfield development options. We can toggle output here down or up to meet requirements. And we're going to talk to you a little bit more about that later in the presentation. You'll note, helpfully, there is absolutely no timeline across the bottom of this this page. And that is because I want to give you our assurance that we are very, very focused on capital discipline. We will only do this in the conditions we've articulated. Okay, so what I might do now is just open up for one or two questions before the full Q&A at the end, just a couple, and then we might have a short break before Mike gets started. Mike's on its way. Microphone is on its way. Both are coming.
Okay, thank you for that. So I got a question on your comment on boom and bust and traditional cycles with long life assets. So to me, what you're saying sounds very similar to what the other gentellers are saying, which is we're going to wait for sustainable signs of demand growth.
Yes.
And that's pretty much how every mining operation works, every long life asset operator works, which is exactly how you do create boom and bust in my book. So we now don't have any investments. Everybody sits and waits. Everybody's waiting for the same signal. When that signal comes, everybody invests. It takes them 3 years to build, and then they have another bunch of 30-year assets, and you have the boom and then the bust. So, you know, what is stopping you from investing now, and how do you sort of counter that risk?
We think, I'll take you back to this slide. There's a lot going on in our industry, and if we went back to one of those earlier slides, lots of red and purple dots all over it on all the reviews and other things going on. We will know a lot more over the next couple of years. We'll know more about the genuine life of our own thermal fleet, about whether the market will support that. We'll know more about what our competitors are thinking about their own thermal fleet, and whether there is an opportunity for a more market-led thermal transition. And I think we'll know more about the role of thermal plant going forward. So we think genuinely there is an opportunity for value creation from thermal transition, but we have to see how all of these reviews play out and understand more about fuel supplies. And so we'll know more in 12 to 24 months. Our own work on thermal transition and on switching the electricity market from its current 80 to 85% renewable through to, say, 90 tells us that market-led transition should be able to get us there to 90, about 90%, at a price that is very competitive through to customers. As you go beyond 90 and climb, and certainly once you hit 93, 94, our work tells us it hockey sticks straight up, and you have to apply a great deal of capital to replace the firming and energy storage ability that thermal plant currently gives us. So basically we're saying patience, let us observe what's going on for a bit longer, and then we'll make decisions on any further investment.
Okay, thank you. Am I allowed a very short related follow-up?
One final one, yes.
And that is just on the last bit you said that, you know, about the market will support TCC. And you talk a lot about the sort of market prices, which is less under your control. But when I look at your slide of the costs and what we already know about carbon costs and a couple of other moving factors, the capex, for instance, it's difficult to see that there's not a supply replacement factor that's sort of unrelated to the market prices, i.e. there are other competing technologies, wind, your own geothermal, etc., which sounds to me significantly cheaper than running TCC, regardless of the market supporting or not.
Well, I think I would agree with that long-term prices and the falling costs of renewable generation will put a cap on long-term prices. We can bring geothermal to market at a very competitive cost. Wind can come to market at a competitive cost. So the ability for thermal generation, base load mid-merit thermal generation, to pass through those costs, its increased costs, is very, very constrained, we think, going forward. Peaking plant and that energy storage role, mission critical and should be able to recover its costs going forward. But any sort of mid-merit plant starts to look quite challenging because you will see competitors build in underneath those costs. And that is effectively what happened 10 years or so ago.
Thank you.
A couple more, Grant?
Is there In your discussions or chats to clients on their carbon concerns and potential in the future where you might do a back-to-back with them, is there a carbon price that you guys see as a trigger that could get them into action?
Well, it's different, obviously, for every industry, but the carbon price has to be a multiple of what it is today. That's the realistic position. So $75 and more, you start to get some interest. One more, perhaps, before we take a break.
Sort of following on from Aaron's questions, really. You talk about not seeing demand growth right now, and I guess the question I've got is around, well, what are the actual tangible signs of demand growth that you need to see before you want to push go? And then following on from that, once you've seen that demand growth, it'll take sort of 2, 3, 4 years to build. Do we have a period there of undersupply, and how do you balance that risk of security of supply, which is in reality from an electricity perspective, worst case scenario?
Okay, so a couple of questions in there. The signs of demand growth, new industries starting at scale. Mass demand, retail demand will see ongoing efficiency gains in the home, and population growth and the likes of electric vehicles may offset those efficiency gains and potentially more than offset those in the case of electric vehicle growth. But it's at scale, it's new industry and expansions of existing plant and existing plant not closing. So the fourth pot line down on the bottom of the South Island is genuine demand growth that's observable, stable, and we look forward to its commissioning and stable operation. In fact, I think it's coming up right now, has been increasing. In terms of security of supply, I think there's a very important role again for thermal plant through that process. So if there's a period where demand is growing and then someone commits to a build, thermal plant will have to operate in the interim. So there's a strange kind of switch point here where we say we want to drive decarbonisation for New Zealand and a lower carbon economy. In that transition period, it is quite possible that electricity carbon emissions go up for a period to manage that transition risk and ensure a reliable supply. If the rest of the economy is using electricity to decarbonise and that's driving the growth, that will be a net benefit to New Zealand in terms of our overall emissions. So we're not saying that the electricity market's emissions will necessarily fall materially at first instance. As demand grows, the first capacity that will be filled will be thermal because it's already there. And that demand growth will then give a signal for lower cost renewables to come in underneath that thermal. Okay, we might just take a 5-minute break so everyone can freshen up. And we'll be back in 5 minutes. Thank you, Matt, for that feed. We'll be back in 5 minutes where you'll be hearing from Mike Dunstall on our geothermal advantage. Thank you.
Tēnā koutou, tēnā tātou katoa. Nau mai, haere mai ki te matahiko o Wairake, ko Mike Dunstall toko ingoa. As James said, my name's Mike Dunstall. I'm the General Manager of Geothermal Resources and Development. Proud to say I'm based here at Wairaki and have been so for the last 11 years. Little bit of history about myself. I'm a mechanical engineer by training, and I studied for a PhD in geothermal reservoir engineering quite some years ago. I have also worked in electricity trading and in the development of hydro and wind. But I'm very happy to be home to geothermal. My wife is tūwhare toa, so that makes my children and me, by extension, tūwhare toa as well. So this is a place where we really feel we belong. And it gives me a tremendous amount of pleasure to be able to talk to you about geothermal today, something that I feel very passionate about. What I'm going to do today, I hope, is to give you a brief introduction to geothermal. I know some of you have been to Contact's geothermal operations before and have some familiarity, some don't. So my first step is to take you through a very brief couple of slides, a 101, to give you a sense of how geothermal works, what the nature of the resource is like and what we're working with. I will then talk a little bit more specifically about the resources that Contact is operating, and then onto the business side of how we go about running our geothermal business, some of the areas of focus where we feel we've been very successful in recent times, as James said, on driving down the cost of operating a geothermal business and making sure that it's sustainable in the long term. So I'll talk about those things towards the end of my presentation. So first up, why do we have geothermal resources in New Zealand, and why do we have them where we have them? Most of the geothermal resources in New Zealand are located in the central part of the North Island, in an area that's called the Taupo volcanic zone. And the Taupo volcanic zone runs from this volcanic centre in the middle of the North Island out towards the north and the east, out towards the coast, and right out to White Island. And you'll recognise that there are a number of large and some active volcanoes along this zone in New Zealand. And that's not the only place that we have geothermal in New Zealand, but that is where most of the high temperature geothermal resources are located. And that's because of the tectonic setting in New Zealand, where we have the Pacific tectonic plate here sliding down underneath the Indo-Australian plate. And there's a lot of friction and melting when these plates rub together, and you end up with liquid magma generated here, which comes up and forms a surface expression in these volcanoes. And it's that heat that is ascending from this subduction zone in these plates that's really the heat engine that's driving all of the geothermal activity throughout this zone, and that's what we're making use of here. Now, we don't get anywhere near the point of this molten material that's down here. What we're using is hot water that's been heated and sits in an economically accessible zone much nearer to the surface. So what do these systems look like? They're basically, many of the geothermal systems are, well, they don't look like this. This is a cartoon. But I'll hope that I can use this to explain what's going on. They're actually essentially failed volcanoes, or the leftover remnants of volcanoes. And what we have down in the very much greater depths than we can access with our drilling technology is some form of molten rock magma, a cooling body of rock that is, truly enormous on the scale at which we're operating. And that might exist at 10, 20 kilometres depth. So we don't need to drill to that depth to find that. What we're doing with geothermal is we're trying to make use of water which has naturally descended through fractures in the rock and come into these zones where it becomes heated and then becomes naturally buoyant. So just as warm air rises, warm water under the ground also rises, and that warm water, it's very warm, 300, 400 degrees C, rises up and fills in some of these shallower, economically accessible ranges of depth that we can actually drill into, and if you have the right conditions, creates a geothermal reservoir that we can utilise. So one of the really important characteristics is that all of this heat that's represented in these fluids doesn't just sort of leak away to the surface at the same rate it's being circulated through the system. And it's quite an essential feature of a geothermal system to have a layer of material over the top of the system here, right on the surface, which essentially seals it in, provides a bit of a lid on the top. And for us here in Taupo, that's a layer of lake sediments that are relatively impermeable to water, and the hot water remains trapped underneath. And then you can end up with an economic concentration of these fluids that is able to be utilised. So we'll drill down into these zones, looking for permeability and temperature and enough of these fluids that we can get economically producing wells that might be anywhere between 1,000 and 3,000 metres deep. The temperatures are very high, about 250 to 320 degrees C is pretty typical, and you can get very high pressure and temperature steam from those systems. Now, one of the things that's really important to understand about geothermal is that you're not just managing this piece that's around the individual production wells. What you're doing when you're trying to manage the resource is you're trying to establish the right sort of balance between these natural flows of cooler water which are coming down, fluids that you may be returning to the system through reinjection wells, and the production. And that's a balance throughout the system that gives you longevity, and it's a balance throughout that system that allows you to sweep heat out of the rock over a really long period of time to give you much more than just what the water and the steam is providing. Because most of the heat that you're taking, that you're using to generate your power, is in this rock rather than in the water and steam. So some more than 80% of the heat that's in the system is in the rock. So you need to balance the movement of the water through that rock in order to bring that heat out and be able to use it in your power system or for industrial heat supply or whatever. So this is a slightly more accurate sort of a cartoon showing how the system works. You've got these layers of rock here which are in our Taupo volcanic zone filled with a lot of jumbled up material that's come from volcanic eruptions. So there's plenty of space between all that jumbled up material for water and steam to move, and that's a very important characteristic to provide us with the permeability for that fluid to be able to move through the rock easily. We've got layers on top which prevent all of that stuff from just leaking out everywhere, and we'll drill down through those to production zones, bring the fluids to the surface, and this fluid that's produced is a mixture of steam and hot water. We separate off the steam from the hot water, take the steam through the power plant, and then run the hot water either through another power plant or direct it back into the ground through reinjection. On the surface, the power station facilities that you see are just supplied normally with steam, and that steam is taken through the turbine to generate electricity and then is condensed at the back end in a closed system which operates on cooling towers here at Te Mihi, on the Waikato River at Wairakei in a once-through cooling system. So here we see that concentration of our geothermal assets in the central North Island. There are a number of other geothermal operations also through this zone here, but the 5 power stations, Te Mihi, Ohaki, Te Huka, Wairakei and Poihipi, In the last financial year, we generated over 3,300 gigawatt hours of generation from geothermal, from about 430 megawatts of station capacity, and that was 8% of New Zealand's electricity. So that's a lot of energy. We've got about 122 wells in service here on the Wairaki and Ohaki and Tauhara fields, 90 which production, and about 30 or 32 injections. So it's pretty typical to be, of that sort of ratio is a fairly typical sort of ratio. We're able to have a larger number of production wells serviced by one reinjection well, generally speaking. So Wairaki is a really important geothermal operation in the world context of geothermal. It was the first of its kind to be developed in the world. The very earliest geothermal operations ran on dry steam, and they were in the fortunate position that when you drilled a well, and this was in Italy and in the west coast of the United States, you drill a well into the ground, and the well would basically produce dry steam with essentially no water in it. And that was the first technology that was used to drive geothermal turbines. When Wairaki was developed, Wairaki was the first field in the world that had a mixture of steam and hot water that was produced together. And so some new technology was needed in order to be able to process that fluid, to separate off the steam and hot water, and to obtain something that was suitable for use in power stations. And this turned out to be a really, really important development, because these wetter resources turned out to be the most common types of geothermal resources that were found in the world. So the dry steam one, which was used initially, turned out to be quite rare. And the technology that was pioneered at Wairaki went on to provide a basis of technology that was used in most geothermal plants throughout the world. So that was 60 years ago, as of next week, way back in 1958. And as you can imagine, any time you've been operating for 60 years on one resource, there's a lot that's changed. Some of that earliest technology is still being used in a very similar way as it was when it was first introduced, and then other parts of it have changed dramatically over time. And the Wairaki story is really a story of evolution and development and evolving thinking in how you make good use of a geothermal resource and how you manage that resource. So here you see a few important points on the timeline for the Wairaki field. Back in 2000, for contact, a very important step in the operation and in the flexible operation of the Wairaki resource was the purchase of the Poihipi Road power station. And I'll show a slide in a few moments which illustrates how that was the start of the flexibility that is so critical to our operation today. In 2005, a binary power plant was commissioned at Wairaki, and that power plant makes use of the water which has been separated off from the geothermal steam. Now, this technology didn't exist in 1958, but it allows about 10% additional power to be generated from the same fluids. So there's quite an uplift in output from Wairaki when the binary plant was introduced, and improved the efficiency of use in terms of gigawatt hours per million tonnes of fluid taken. We've continued to work to improve that efficiency, and I'll explain a little bit more about that later too. 2007, an important milestone where Wairaki's resource consents were renewed. So when the Resource Management Act was introduced in 1991, the major existing operations had 10 years to apply for consent, and for Wairaki that was done in 2001. It actually took a long time to get that first consent through. The consenting authorities had an awful lot to think about in terms of how to manage these older assets and some of the legacy issues that came with them. And The consents were granted in 2007, and a really important part of Contact's thinking was about how to meet the new environmental standards that were required under the new consents versus what was required or what was thought appropriate back in 1958. And Contact had to think at that time about the potential for a complete replacement of Wairakei, and that was one possibility with Te Mihi. At the same time, you could have gone in and extensively re-engineered the Wairakei plant to meet the new requirements. That was another possibility. The optimum solution turned out to be a blend of those things. So it was to build Te Mihi and to make some important changes to Wairakei, basically while it was in operation, to allow it to continue and to meet those standards. And the really big one down at Wairakei that was key to the ongoing operation was the introduction of a bioreactor which removes hydrogen sulfide from the cooling water before it re-enters into the Waikato River. And hydrogen sulfide is a naturally occurring gas that comes in geothermal fluids. You know it has that characteristic rotten egg smell that you get in a geothermal environment, and some of that gas ends up dissolved in the water. So the hydrogen sulfide is removed by the bioreactor as a really important piece of technology, and quite innovative. I'll talk a bit more about that later too. And then Te Mihi, of course, came in 2014, a really important part of the dynamic system that we have. So Wairakei is New Zealand's largest geothermal field. It's the most, it makes the greatest contribution to Contact's total generation, and it is our lowest cost field to operate. You'll see here the costs on the Wairakei field are our lowest of all of our fields, and because it is the largest contributor, that has the greatest effect on our average. It is consented until 2026. We'll reconsent it at that time, and we have several options to consider at that time, including building a third unit at Te Mihi. We have space out here. You'll be able to see that today when we go out for a walk around, as well as further options for how we could deal with Wairakei. The really important thing about the whole Wairakei operation is that it's not one power station and one steam field. It's a resource with 4 interconnected power stations on it, and being able to operate those all together as one system adds a significant source of value for us. And Wairakei is a low carbon emission field, as James said, really much lower than Oahu, as you'll see soon. Got about 90 wells in service here and 2,800 gigawatt hours of generation. That last statistic, I think, is a pretty impressive number. 70 terawatt hours of generation since 1958, so that's a huge amount and a reflection on just how reliable Wairakei has been and what a great resource it is. And the best part of that story is that there's plenty more where that came from. So some of the stats on our Wairakei operations is about half our generation or so is coming from Te Mihi, or did last year. We've got very, very high availability on our plant at Poihipi. There's some very impressive numbers there. At Wairakei, we have reduced the capacity factor over time. That 70 terawatt hours would not have been obtainable if this was the Wairakei number since 1958. We have scaled it back, and that's because most of the time at Wairakei we're constrained by our permitted resource consent take. So our Wairakei plant, being the oldest plant, it's not quite as efficient at turning steam into electricity as our new plant. So we preferentially supply our new plant with steam, and we use Wairakei to provide the flex in the system. So our consents allow us to take 245,000 tonnes per day of fluid on average, You'll see that the number there is actually slightly greater than that, and that's because there's not a perfect alignment between our financial year and our consenting year. So we have the ability to flex that slightly between seasons if we want to. You'll see on those purple coloured spots on the bottom of the slide there that we've been improving steadily the amount of electricity that we're able to generate from the fluid that we're taking from the ground. So we have, over the last few years, stepped up. We're just part of our constant drive for improvement, and as James referred to, some of the ideas that have led to these numbers here in the most recent times have come from our staff saying, hey, how about we do it this way, or how about we do that? Let's look into that. Can we squeeze a little bit more out of this tonne of fluid? There's been some really great ideas there, and a lot of work gone into getting the most out of the fluid that we're able to take from the resource. The interconnectedness of the power stations is a really key part of that. Out at Ohaki, our costs are considerably higher. The field is more difficult and more expensive to manage than Wairaki. It is consented for us to run again until 2048. So that was reconsented in 2013 for 35 years. It is much higher carbon emission than Wairaki or Tauhara. And our main constraint at Ohaki in recent times has been around re-injection rather than production. We do have the ability to get a bit more production, and we're actually drilling, mobilising to Ohaki this week to drill 2 small re-injection wells to help with this constraint, and that's the first time we've actually drilled any wells since 2013. One of the interesting things that has been developed at Ohaki is a silica extraction process. So while some of the aspects of Ohaki make it more challenging and expensive to operate, it also creates opportunity. So there's more silica in the fluid at Ohaki than there is at our other fields. And we've been working with a company called Geo40 and with Ngāti Tahu on a commercial venture to extract silica from the geothermal fluids and to make use of that as a source. We're basically providing the feed stream to the process, and Geo40 have the technology in the plant. Ngāti Tahu are providing the land lease and so on. So it's an interesting diversification in the way that we think about using geothermal resources, and that's been getting quite a lot of interest. At Tauhara, we've had a presence basically since the start of Contact. Contact acquired the rights to operate at Tauhara and to build at Tauhara from ECNZ, and purchased some wells that had been drilled earlier by the Crown at Tauhara. At that time, Tauhara was thought of as being relatively modest sort of a resource, and the wells that had been drilled really only had explored a small part of that resource. Contact had some consents for building a small power plant there, and the Tuhuka power station was eventually built in 2010 from some consents that had been granted in 2001. But in the interim, we had also set up our first really big direct heat supply with the Tenon wood mill, and they used geothermal steam to dry lumber in kilns, clear lumber, for export primarily to the United States. They love geothermal. It's very, very fast to heat their kilns. They were previously using natural gas. It's much cheaper and performs better for them. So they've been a very important step in that direction for Contact. And then in 2010, we did some more exploration of Tauhara, demonstrated that it was actually a much bigger resource than had previously been thought, and showed that it was possible to develop at least another 250 megawatts from Tauhara, and we secured resource consent in 2010 to do that. Since that time, we've had some really good operational experience, and our experience at Tauhara has come through our operation of the Tenon wood supply, the direct heat supply to that mill, and through the operation of the Te Huka binary plant, which has been running up close and sometimes over 30 megawatts in the last few months. The great thing about this is we've had 10 years of experience operating this system, so we've been able to see how the wells respond. We've learned a lot about how to manage scale in those wells, and importantly, we've exercised the consents for Tauhara, so we don't face a lapse period on those. Tauhara is another one of these fields with quite low gas. It's a field that is connected at great depth to the Wairaki resource and has some similar characteristics. It's a little bit higher in temperature than Wairaki, and it does cover a much larger area. The Tauhara side of the field is about 50 square kilometres, and the developed part of the Wairaki field is about 25 square kilometres. So together, that system is an absolute world-scale geothermal resource, very, very, very large. So Tauhara's characteristics being more similar to Wairaki are resulting in costs that are not so dissimilar from Wairaki either. Some similar sorts of numbers there. So how did we get there, and why did we choose to focus on the things that we did? I think this slide, there's quite a lot of information on this slide, but it conveys the things that we believe are the really important points that you have to have right if you want to do geothermal development, and if you want to run geothermal operations successfully. And quite some time ago, over 10 years ago now, we sat down and worked out where we thought Contact's geothermal business should go, and the areas that we should focus on if we wanted to be successful. Because some of the elements that you need to operate and to build geothermal, you can buy in. And then there are some other elements that are actually much harder to find. And you need to nurture some of those elements. You need to provide opportunity for people who are working in that space to work on good projects. And we've been really blessed at Contact that we've had the opportunity to do that and to build up a great team of experts to support our operations. So when it comes to some of the specifics, you've got to start by finding the resources and identifying the resources in this first column. It's one of the areas that we have built up a level of expertise. We can't always manage the volume of work, but by having enough of our own in-house experts, when we bring others in, they're adding to the capacity that we need, but we're not entirely reliant on their views. We can be an expert customer to those services. So we have a number of those aspects. When it comes to the execution, we've got a really capable drilling team and a team that had some of the greatest geothermal experience in the world when we were exploring at Tauhara, when we were building Te Mihi, when we were going through a really intensive period of development. Built up a lot of experience, and then we had to make that really important shift that James was talking about. We had to convince the drilling team that the answer to the future for them was to try and not drill any more wells. And that was a pretty, that was initially a bit of a tough sell, but they took to it and they really responded to the challenge. And what we've done there is we've gone away from using drilling rigs is basically what we've done, because drilling rigs are so expensive to mobilise, and they're so intrusive that you often have to take a lot of other stuff out of service in order to get them in onto your operations. So we've gone away from that, using a number of other methods and much smaller equipment, like coiled tubing units and so on, to shift the emphasis. When it comes to reservoir engineering, that's another area of great strength in Contact. Really important for understanding the development side and that balance that you need to have in that cartoon that I showed you, the multicoloured cartoon. How do you balance up reinjection, natural inflows, getting the right amount of pressure draw so that you can stimulate flow to come up from underneath from that great depth where everything's really hot, not to flood the whole thing with cold water and so on. Really critical part of it. Plant design, we've not covered absolutely every aspect of plant design at Contact. We've tried to pick and choose the bits that really help us the most. So how we develop steam field, how we manage the steam gathering system and reinjection systems and so on. We think that's an area of really unique expertise. We're not so focused on building power stations. We can hire people in who can help us to build power stations, but getting the steam field right is something that we have focused a heck of a lot on. And then on the operations and maintenance side of things, we're pretty lucky again that our operations and maintenance staff, they get to work on some of the newest geothermal assets in the world and some of the oldest. And that spread of skill and breadth of experience that you need to be able to manage that variety of assets is a great strength. We've seen many of the issues that come with owning decades old plant that help us to anticipate how to manage the likes of Te Mihi into the future and so on when this plant's not even 10 years old yet. But we know what it's like to have decades old plant. So those are some really important aspects. And our project, on the project management side, we obviously had a very intense period of that with building power stations, but there have been significant capital works that are required on an ongoing basis. I guess overall, in summary, we've been able to keep really talented people engaged because this resource, the geothermal business, is very, very stimulating. It's very, very stimulating work, and there's a lot of good stimulating work for a relatively small number of highly skilled people. So, as we've shifted away from a focus on new development, new build, our team's really focused on trying to drive costs down in the operating part of the business. We've looked for innovative ways to do that, and you can see that there's been some quite significant shifts in the approach that we've taken to managing our fuel supply. So from FY10 to FY14, you can see we were in the phase of drilling. We drilled a number of wells to fuel our plants. We were doing a lot of workovers, a lot of maintenance on wells with drilling rigs, and a relatively small amount of work. We just started really with using coiled tubing units, and a small amount of experience with chemical interventions. Our first real step into trying to drive down the cost and to remove the need to bring in drilling rigs was a technique called broaching, which we started with in this period, and we did quite a bit of work with broaching, and that's a very low cost method of scraping scale out of wells that you can do on a wire line. So rather than having to bring a drilling rig in and all of that equipment to clear out scale, you could run these tools down on basically it's just a wire that runs down on a winch, and you could scrape material out of the wells that way. That works. It doesn't work in every scenario, and it does have some risks associated with it. We did get stuck a few times, had to recover that equipment. And in some wells we just couldn't effectively clean them that way. But it did show us that there was a path to some different ways of thinking about how to approach these problems. As we looked for different technology, we put a lot of emphasis on the use of coiled tubing. A coiled tubing unit is much, much more compact and much cheaper to operate than a drilling rig. Coiled tubing also has a characteristic where you can enter the wells with the wells hot, and this is a very important feature of coiled tubing, because a coiled tubing unit has a drum of pipe, as its name suggests, just coiled up in a big reel. It looks like a big cable drum, but it might have 1,500 metres of steel pipe all wound onto a big drum, and you can run that piece of steel pipe into the well in one trip. There's no need to join the pipe together as you do on a drilling rig. On a drilling rig, every 18 metres you've got to screw the pipes together and carry on. You don't need to do that with coiled tubing. You can go in and out in one hit. And you can do that with the well hot. It's quite safe to strip in and out with the well hot. And we worked with our contractors to develop some methods that could be run on coil that allow us to enter the wells hot, to clean the wells out while they're flowing, and that allows us to take any of the material that we're trying to remove and flow it back out to the surface so it doesn't fall down and block up our reservoir. It also means that in some instances we can even keep the wells supplying the power station while we're clearing things out. That's been a great step forward. It's a lot cheaper, and our turnaround times have gone from 3 weeks down to like 2 or 3 days. So been a really massive step change there. The other big area of change is in the use of chemical anti-scalent systems to prevent scale build-up in the first place, and you'll see some of those this afternoon on the field visit, and on some chemical interventions, which again, where we've worked with suppliers, we've developed shared intellectual property around these types of chemical interventions, and they allow us to manage scale both in the wells and in the reservoir, which is impossible to reach with any physical intervention. You can't reach out into the reservoir rocks with physical intervention using a drilling rig or a coiled tubing unit, but you can if you push chemicals out into the reservoir, and we've done a lot of work on that. And together those things have dramatically lowered the cost of us providing fuel to our operations. Some other things that we've changed are around the way that we operate the power stations, and this one is for the Wairaki field. As I mentioned, this is actually 4 power stations that are operated in combination, and our main constraint on output from this field is around the amount of fluid that we are permitted to take. So we are allowed to take on average 245,000 tonnes per day of fluid, and we used to have to average that over a quarter. We applied to the Regional Council for a change to our consent conditions to allow us to average that over an annual average rather than a quarterly average, and that gave us a lot of flexibility. So you can see that the lighter lilac colour here represents the kind of profile that we might operate to with an annual average, and then the darker purple line shows the sort of profile that we might operate to when we have a quarterly average. So what we found we had when we had a quarterly average is that we would have to position our outages so that they crossed quarters, for example, so that by placing the outages across the start and end of a quarter, we had a greater amount of time available to us to catch up that volume. So we could then use both of the quarters to essentially to catch up for any volume that might be displaced during the outage. When we moved to annual, we got a better flexibility for that. So here's an example where we can take an outage that might have been scheduled for the middle of the year, when we'd actually prefer to have the generation available, to have that capacity available, and we can move it into a period of time in the year where we might have cover from one of the other plants in our portfolio, for example. So that's one important instance in which we can make use of that annual averaging. Another one is that it reduces the amount of fuel that you actually have to be able to catch up. So running for longer periods of time at slightly lower output means we don't have to have as many wells to be able to do that. So we don't have that peaking requirement in terms of our steam field infrastructure, because we don't have to run as hard over such short periods of time in order to catch up. So that's an important plus. And then the other plus that comes from it is that our plant operates at its most efficient in certain settings. So we could overload the plant and get the higher output if we need to, but if the prices are right and the circumstances look right, we'll try and run the plant over a longer period at maximum efficiency so that we can get the most gigawatt hours per tonne of fluid taken. So those things have really, really helped in the flexible operation of Wairakei. And here's an example of how we've configured our steam field to be able to do that. So the original operations were based around Wairakei, and they were supplied by these Western Borefield wells and some wells from Te Mihi. The Poihipi Road Power Station was a standalone operation before Contact acquired it, and it had its own wells. But they were never able to provide enough steam to really load that plant properly. So it was natural in the end for Contact to acquire that plant and to connect it up to some of the Wairakei system through here to Te Mihi. And that was the start of the flexible operation. We had Poihipi at one end of the system, Wairakei at the other end of the system. And then when we came to build Te Mihi, we built Te Mihi so that it could be fueled by a number of wells up here in the Te Mihi area. And some of those wells are dedicated to these Te Mihi units, 1 and 2. And then another group of wells are what we call our swing wells, or our wells that can flex between supply to Te Mihi and Poihipi or Wairakei. So if we take out Te Mihi Unit 2 for maintenance, we can swing our wells away from Te Mihi, push them down to Wairakei where we have some capacity, and we can continue to take it at the full take that is permitted for the field. And that has given us a lot of extra gigawatt hours. Here's another cartoon depiction of what's happening in our system, and this is shown as an example of how the solutions that we've implemented at Wairakei have often been a blend of things. As I said, when we renewed our resource consents at Wairakei, it was an important there was an important change in the way that H2S had to be handled to meet the new requirements. And that was really to ensure that the river was not being subjected to a large hydrogen sulfide load. And part of that solution, a really important part of that solution, was to implement this bioreactor at Wairakei, which is really just it's a bunch of tubes. They're 100 millimetres in diameter. They're polyethylene tubes. They're about 100 metres long. And all of the water that comes from the Wairakei power station, all the cooling water, which has got some hydrogen sulfide in it, takes about 5 minutes to flow through these tubes before it enters back into the Waikato River. And those tubes just provide essentially a habitat for some naturally occurring bacteria that live in the river system. And those naturally occurring bacteria absolutely love hydrogen sulfide. And they just chew that stuff up, and in 5 minutes, it's almost all gone. And The water is then able to enter back into the river system. We don't have to stock the bioreactor with any of these bacteria. They're naturally occurring. So anywhere you find geothermal fluids in the natural environment, you'll find these bacteria. So they're very happy to live here. We just built them a really cosy home that they love to be in, and this has proved to be a really elegant solution for the emission issues at Wairaki. It's brought the Wairaki a long way forward in terms of its environmental performance, and it's been a very reliable system. And these guys don't send us a bill for any kind of chemicals. They don't ask for wages. They just like to be fed. The thing that has been interesting is that the operators have had to learn. They've had to learn how to manage a population, because if you don't feed these guys enough, they'll die, and then it takes a little bit of time for them to get re-established. So the operators have had to learn how to keep them warm, keep them fed, keep enough of them there so that when they want to ramp up the output, there'll be plenty there to eat the H2S and so on. But as you know, with bacteria, if you give them the right kind of conditions, it doesn't take them very long at all to really get the population up. So that's been an important aspect, and I think reflective of the approach that Contact takes to problem solving. This is the only geothermal bioreactor in the world. It's not the sort of technology that we'll be able to sell to hundreds of others, because there aren't hundreds of others with a geothermal power station operating on a river. But it is an example of how we've gone about solving some of the issues and bringing Wairaki forward into a modern context. I think this slide here really sort of sums up where we've been in the development of our resource here at Wairaki, and there is a very substantial uplift in the output that you can see over time, and it's come about through a number of things. There's the addition of the Poihipi plant, there's the Wairaki binary plant addition, which, as I explained, added about 10% more power from the same amount of fluid. And then over here you can see what we've done with the Te Mihi power station. As we've introduced that, we've decreased our reliance on Wairaki and substituted that with Te Mihi. But compared to the business case that we had for Te Mihi, we're exceeding that now by a considerable margin, and the number of gigawatt hours that we've been able to get per million tonnes of fluid taken is greatly exceeding what our original projections were, and that's a combination of a few things. One, the reservoir is performing very, very well, certainly on the upper side of the range of possibilities that we considered when we built Te Mihi, and also the continuous improvement that's been made in the utilisation of the fluid. There were many of those projects that were just not anticipated at that time that have contributed to that. So that's it from me. I hope that's given you a bit of a sense of how we go about our geothermal operations and how we think about geothermal development. Some of the things that have contributed to us being in a really good position that we're in today. Thank you.
All right. What we might do, rather than put questions to Mike now, is we'll wait until the end and we can do a Q&A across Mike's session and this final section in which I'm going to talk to you a bit about our geothermal options. I showed you that wonderfully undated chart earlier. Perhaps I'll better paint some colour into the large grey area in the middle there over the next 10 or 15 minutes or so before we hear from Dennis and get into some Q&A. So I'm going to touch on two topics, Wairakei 2026 and Tauhara development options. I guess the key point here is that any form of renewable development is much more than a simple consenting exercise. It requires long-term thinking, it requires genuine relationship building with stakeholders, it requires some clever solutions to difficult problems, as well as the normal engineering considerations that you would expect us to be taking into account, the state of the reservoir, the costs of the surface facilities and the various surface facility options. There's an enormous amount of work done with stakeholders to build long-term relationships. Actually, the Geo40 example that Mike gave earlier around our Ohaki field is quite a good example of that. For us, with a silica-rich resource, removing silica from wells is very costly. If you can get a business in that takes the silica out of the fluid before you stick it back in the ground, it's a massive cost avoidance. For our stakeholders at Ngāti Tahu, our partners there, they get some land rental and they get cleaner fluid flowing through into their taonga, their nafa, and their tribal baths. So everybody is winning in that example. Our costs are lowered, a new business gets access to a silica resource it can sell, goes into paint and other bits and bobs around the world, and the local iwi gets jobs, rental, and an improvement in their traditional resources. Those are the sorts of quite creative, sustainable solutions that we seek to find. And when we've gone out and talked about Wairakei with people, and we have started this very early, it doesn't need to be reconsented until 2026, but with that long-term thinking in play, and to understand our forward options, we have started now. We have run what's called a design thinking workshop process with over 70 stakeholders. We've gone out and asked them what they think of the plant, what's on their mind, what they think of us and our operations, and what are the things that they believe we should be taking into account as we look at the options for Wairakei going forward. And these 5 areas are areas that we're being guided towards by people who will have a major influence over the future of the Wairakei operation in 2026. So our stakeholders are telling us, make sure you are good stewards of the water you are using, and the bioreactor is a fabulous example of a creative way of reducing our impact on the Waikato River. They are looking for more cascade uses. What can they do with our waste to make money? And that's terrific for us. There are opportunities for people to utilise what's effectively our waste for the benefit of them, their families and their communities. Likewise, more community involvement is desired. So we need to be looking at perhaps opening ourselves up a little more to our communities, letting them see what we do and understand us a little better. Then, of course, as I said earlier, the core engineering disciplines. What will a reservoir sustain, and what's the optimal mix of plant on top of it to maximise its utility? And this is what we're seeing. Based on the reservoir work that Mike and the team have been doing, by 2026 there will still be a substantial resource available for operation here at Wairakei, over and above the big red block there, which would be Te Mihi and Poihipi and the Wairakei binary plant still operating. The grey area would be the Wairakei station coming off or not. So the resource is stronger than we anticipated. And in particular, some of the older parts of the field, and perhaps on the steam field too, you'll hear a bit from the guys about that, but some of the older parts of the field down near the Wairakei station are producing more strongly than we anticipated. And that's where a lot of that value Mike talked about earlier, that we're getting in the Te Mihi, against the Te Mihi business case. That's where that value is coming from. So there's fluid there, there's resource there. It's up to us to think about what are the best ways to utilise that going forward, and then to build that into a sustainable solution that is consentable going forward. Where are we? So we're looking at 4 options, I guess, 4 thematic options, because inside each of these there's a myriad of variations on a theme. The one most of you will likely have in your thinking, and has been our base case as well, hence it's in your thinking, is the one on the bottom there, Te Mihi Unit 3. So that's just extending the plant we're sitting in today. Mike mentioned earlier, you'll be able to see where that would go out the back of the facility you're in right now. That comes with a particular capital cost and operating cost profile and associated complexity and outage, etc. across that page. It possibly doesn't deliver the flexibility of some other options and comes at a higher capital cost. So as we explore other options, moving up the screen away from that base case, there is potential for placing a smaller, newer power station nearer this resource that is continuing to deliver. That is an alternative option we are looking at. That comes also at a higher capital cost, cheaper potentially than the base case, but nevertheless a higher capital cost. It will require some outage, delivers a little more flexibility, not quite the efficiency of a Te Mihi Unit 3. Moving up that screen to the next step, we could repower Wairakei A and B. The facilities are all there. We could utilise the balance of plant, but essentially conduct a bit of open heart surgery on it, rip out the heart of it and put in some newer kit. Yeah, that's probably lower cost again in CapEx from the Greenfield Wairakei idea, but it does come with a higher future cash cost, operating cost, and would come with a long outage. You'd have to take Wairakei off for a long time to pull it to bits, pull all the old bits out and put new bits in. That's the technical term, bits. And you get a less efficient outcome than the newer plant down below it. You would, however, probably get a more flexible outcome utilising the plant, because the steam fuel kit is all set up, as Mike's demonstrated, to enable swing of fuel down to Wairakei when the more efficient plant up here isn't available. Or alternatively, and finally, simply maintaining Wairakei A and B and spending some money on upgrading it to more modern engineering standards and safety standards. That comes at a much lower capital cost, but would have, against the other options, a higher ongoing operating cost to us. It still comes with an outage and lower plant efficiency, but a very, very flexible system that's already in place. So it enables us to continue the sorts of operation that Mike's taken you through. So right now we're working all those. We're trying to understand, rather than in scaled symbols, what the actual numbers are, so that we can start to make the trade-offs and think about what kind of solution could be available that is an improvement on the current base case of a Unit 3 out here at Te Mihi. Looking to Tauhara, over the other side of the river, we have a large-scale resource that we've learnt a lot about in the last 10 years since we investigated and consented that resource. And at the moment we talk about it as at least a 250 megawatt single-stage development. However, that's not necessarily how we think it should be developed. You learn a lot in 10 years. You learn a lot about the resource and a lot about the plant options that can come to market. And so we're seeing the opportunity for a stage development, a potential for a modular build-out of that resource. And in fact, if you think about boom and bust risk, managing boom and bust risk, modular investment is possibly the best way to manage both your resource risk long-term, your capital cost risk, and market impact risk. Just a staged rollout of new plant on a large-scale resource. So we are doing some work right now to understand, again, what those costs are. We need to be able to make decisions for what we might do at Wairakei in 2026. We need to understand what alternative options are and what they might cost. And so we're investigating those right now to understand what options will emerge for us at Tauhara. If we did Tauhara, if we did Tauhara, We're getting very good long-run marginal cost estimates coming into us. If we did tauhara, it comes with a new transmission connection. And at the moment, at Te Huka, which is also on the tauhara field, a small binary plant we already operate there, we are slightly transmission constrained, not resource constrained and not plant constrained to a degree. So there's a low-cost expansion of Te Huka that becomes available if or when we develop the tauhara field. And this is at a very, very competitive long-run cost to contact. And so we look at all these options and go back to those earlier comments around the state of the nation's fuel supplies and risks of boom and bust, of underbuild or overbuild, and think that these low-cost modular or stage development options are quite critical to contact and quite an opportunity for New Zealand to manage a transition through a reduced thermal operating regime, which is where we end up with our great big grey area, which tells you that we can raise or reduce our operations here as is required to meet market demand. If there is large-scale demand destruction, there is no need to reconsent the Wairākei plant in 2026. If, however, that doesn't happen and it's stable operation, then we will adopt the best case option for Wairākei 2026 and keep operating at similar levels of production. If there's demand growth and or thermal removal, there is the opportunity to bring in an optimal way, perhaps a modular way, an expansion, brownfield expansion at Tauhara and at Te Huka at a very good cost point. So all of those options sit in our portfolio with no specific timeline underneath them, and we are doing the work now to understand the costs associated with them. So I have deliberately rattled through that somewhat so that there is time for the Chief to actually get out of his chair and contribute, and for some Q&A. And of course in Q&A I encourage you to ask any questions from both my initial discussion, from Mike's conversation, from this brief review of our geothermal options, and of course what the Chief will now say. So I'll hand you over to Dennis. Cheers.
Thank you, James. So the only thing I can guarantee is that I'll get out of the chair. I don't know about contribution. So really this is just a wrap-up of what you've heard from the guys this morning. I mean, somewhat tongue-in-cheek, you know, sustainability is the way we do things around here. Some of our competitor companies are trotting out their chairpersons to do roadshows on what sustainability means. We've had an integrated report for 4 years now. You know, we have early adopted TCFD, first green bond. So, you know, it really is the way we do things around here. Perhaps our failing has been PR has not been our strong point on this topic. We really are preparing for a low-carbon future. You can see through the many options we have available to us from either new build, extension of continued renewables, and the options we have around thermal generation. And part of what we've been doing this year is preparing for that, so the gas storage facility being sold and expanded is part of that story. I think it goes without doubt when you look at those numbers, both in absolute terms and in trend, that the operations of geothermal here are, you know, world class. You know, some of you will remember we had a look at some international assets a few years ago, and you know, nothing compares to the resources we have locally. Now, some of that is just it's a great resource. And we are blessed with that great resource. But it's also down to the hard work of the people and the focus we have on continually improving the operations. Those operations also give us a bit of choice. You know, so there's a great virtuous circle here. While we're reducing the cost of operations, we're making the fluid use more efficient. It actually reduces the long-run marginal cost of what we might do in the future. Whether that's a continued operation at Wairake or it's brownfield development of Tauhara. And I keep stressing brownfield because, you know, we've been on that resource for 10 years, we've been on Wairake for 60 years. You know, these are pretty low-risk development options for us. The question that was asked this morning and the challenge we will have over the next few years is what does the market think about that? What is the opportunity for substitution or to actually build into demand growth? And you've heard it relentlessly this morning, albeit hard to pin down what the measures are, that we will only develop and spend money on the back of true observable demand growth, contracts or substitution. And having said that, I think the guys have given you enough insight that what we're talking about deploying here is pretty low numbers. You know, the first stage Te Huka expansion, you know, would be less than $100 million. And if you actually look at how the market is developing anyway, you are seeing a trend towards more modular, lower risk build. You know, we like to talk about the upside from the 50 megawatts TY aluminium smelter demand, but actually in the last year you've probably seen about 50 megawatts come onto the system from small geothermal operators or improvements in existing facilities. I think that challenge changes over the next 3 to 5 years. I think the numbers become bigger, and I think that's why we have to be ready. And hopefully this afternoon you'll see that we're getting ready in a very ordered and efficient and commercially focused way. So with that, all the presentations from this morning, and just because you're all here, we did also release our operational statistics this morning. And therefore, with the material from this morning and the op stats, because I know some of you will have pored over them already, we're happy to take questions. And we will have to move to and from the microphone. Oh, okay. Just leave it. So it's just questions as well. Yeah. I think Aaron was first again. Oh. You need the mic, and then do I need the mic, or will I stand there? Oh, okay. Yeah.
Okay, so I've got 6 questions, but I'm going to stick with the first 2 for Dr. Mike. And this is just for my understanding, which is clearly not very high. And that I'm just trying to understand the nature of the consent for Tauhara. Is there any sort of use or lose type clause in those consents, or can you sit on them forever to 2045 and do nothing if you want to? And second and related, and this is, I assume the answer is no, but just for my understanding, can sort of anyone else bid for one of your consents, if I put it that way? Can somebody come in and say, you guys try to reconsent Wairake, and then somebody else and says, hey, we got an even more environmentally friendly solution, we want to actually build or use this consent instead of you? Are there such clauses in these consents?
Yep. So in terms of a use it or lose it kind of a thing, we're already using our consent at Tauhara. So our consent has been exercised in order to provide heat to our Te Huka binary plant and to the Tenon operation. So while we haven't used the full extent of it, it has been exercised, so it will not expire until the consent has run its course. So it's already in play. So that's the first part. In terms of can somebody else apply for the consent or to take some part of a volume that's not being utilised at the moment? Yes, in theory, anybody can apply for a consent to utilise geothermal fluid on the Wairake or the Tauhara field, for example. However, having consent from an environmental perspective is only part of what you need. You also need access to the land to get access to the resource. And Contact has a very, very strong land position around Tauhara. So we're a major landowner or have rights over very extensive areas of the Tauhara resource. So yeah, you need environmental consent, but you also need an agreement with the landowner and we have both of those things.
So it's in practice now.
Andrew? I've got one here with Andrew.
Early on in the day, you talked about the potential, I guess, for using direct steam for industrial purposes and maybe bringing in some others into that space. Does that actually use the steam that is therefore would be unavailable for geothermal purposes? And I guess following on from that, presumably direct use is more valuable from your perspective rather than actually producing electricity?
Yeah, I mean, one of the guys will correct me if I'm wrong, but the use of direct heat actually uses quite a small part of the resource. So Mike referred to 122 wells on Wairaka. The 10 on heat is one well and one backup. So it's actually quite a small proportion of the resource. So it doesn't really limit your electricity ambitions. It's very attractive because it's so competitive relative to other fuel sources that the returns we get on the investment are huge. But for a replica of 10 on, one well with one backup, we might be putting in $15–20 million. So you're getting huge percentage returns, but absolute returns are relatively small. What we have done when we've looked to attract those businesses into the region is to look at electricity supply, heat supply, and land use agreements. So you end up with quite a good package. It's very good for us, but it doesn't limit our electricity ambitions.
And my second question, I guess, was just around Wairaki, and given you've got 2026 as your deadline, when do you need to have decisions made about what you're actually going to do at that field? What's your drop dead date?
I mean, it's a bit of chicken and egg. If we didn't have, a thermal transition happening in the next 4 years, then, again, correct me if I'm wrong, guys, probably 2024 we'd make the application, and, particularly if we're going for one of the low capex options, we wouldn't get round to it till 2023, 2024. But because we've got this thermal transition coming up, and whether Wairaki, Tauhara form part of the decisions around Huntly or TCC retirement, then we might go early. But there's nothing to stop us doing all the work on Wairaki and then just putting it on hold for a few years. I don't think we're going to get a locally contentious process. It's actually more about taking that chart with the arrows and the pictures and turning them into some numbers to our satisfaction. Remember, Wairaki's been reconsented 7 times, is it? Several times, yeah. It's probably 4 and I've exaggerated it, but you get the point.
Dennis, can I just start with Te Mihi 3? If you do go ahead with that, and let's say that's a worst case scenario, how many gigawatt hours is that, and what is the cost we should be penciling in for it?
I mean, so Te Mihi 3 would give you something like 700 gigawatt hours. So versus the Wairaki station production of 900 and odd gigawatt hours. And based on the contract we did for the first 2 units at Te Mihi, you're probably looking at just shy of 300 million.
My second question is more short term. You mentioned that you're not very contracted into 2H or calendar year 19 on gas. And looking at your gas costs conversion into short-run marginal costs, if the $20 that's currently prevailing in the market holds in the second half, would we be looking at $155 type dollar cost to you guys to cover some of your load?
Yeah, I mean, the $20 is on, it might fill a small milk bottle of gas volume. I mean, the traded volumes are tiny. That's not really the market that we're operating in. The market we're operating in is bilateral contracts. And the bilateral contracts have taken a step, but they've taken like $1.50. They've not taken a step to $20.
So not facing much 2H risk from gas pricing?
I don't think gas pricing is a material issue, and if you think about what it means for our renewable business, one could argue that it's almost good for us. The question will be availability. I think the days where we could wait till February and then pick up 10 to 15 petajoules are probably gone. So we're, working a bit harder on that front. I don't think we've got it wrong. I think 19 will be fine. But I think there's just a bit of posturing at the moment we have to work through.
And then in terms of cash costs, down to 143 million in FY19. You were in the past talking about retail had a bit more to go. Is it still
143? What's the 143?
143 is...
Oh, wholesale, yeah, okay, yep.
Is there much more to go on that front into 2020 and beyond?
Well, we've given you the number for 2020 of 190 OPEX and 60 to 65 CAPEX. And then I think there's another couple of years of 10. But it'll be retail. It'll then be retail. It won't be wholesale.
And the last one is just on contracted sales of around about 1,300 gigawatt hours in your slide earlier on. Half of that is the 80 megawatts with Mel. For the what is the rest of that contract?
With the smelters probably now with the fourth pot line, 800 gigawatt hours. There's about 300 gigawatt hours which goes to second tier retailers. I think it was 305 gigawatt hours last year. So actively supporting the second tier market to be healthy. And then the balance will just be short-term trading, buy a bit, sell a bit, We've got plenty of water this week, I'm sure we're sold CFDs. Steve?
Hi, Dennis, and team. You put up a number there of, I think, 6 terawatt hours as a prospect for your geothermal output over time. I know there's obviously a lot of options, but can you give us a range of LRMCs within that block of, I guess, an additional 2.7 terawatt hours? Second question, are there any end-of-life remediation costs at Wairākei? And then third question, what do you think happens to EIT allowances from next year?
So the first two are a bit easier than the third one. So the range is, if it's brownfield, like a Te Hooker expansion, we're in the low 60s. And if it's brownfield, we're in the higher 60s. And if you wanted to do what's return of capital and what's running costs, cash running costs, because we think about, we think about medium-term CapEx, we think about it in the LRMC. Sort of 2/3, 1/3. We're pretty confident that range is, pretty good. That's using a return rate we won't tell you, of course. But, your current wholesale prices, you're looking at 9 to 10% post-tax returns at those numbers. In terms of end of life, there will be no end of life at Wairākei, but let's say that it is, which will be way after our time. I refer to the Te Mihi project and the work of the last few years as the midlife refurbishment. So I think we are talking about an end of life which is a long way away. I think it's still reasonable to assume that, the scrap value of the kit pays for the site remediation. Sort of a rule of thumb for many power station operators. And also bear in mind that there's a pretty big Transpower facility on site. So they will continue to use, the Wairākei site forever to keep the grid running. So a lot of the facilities will still be there in terms of roading and gates and, access. So, yeah, it's pretty minimal. And then your last question. The only insight I have into that is actually a Macquarie report, Stephen. So, so you might tell us what you put in that report, which is that the large consumers who have been gifted units, I think, just an aside on that, a few of them are waking up to the value of them. A lot of them have not been active in the market with those units. But I think the the review of the ETS will see those be phased out over time. I can't remember what you put in your report, but it's as good a guess as anybody's. There's a sort of gradual phasing over 5 or 10 years, I think. What I would say is that there's probably a lot of those units banked based on sort of a pretty rough methodology from 10 years ago, which has probably got a bit of a windfall for the holders of those units. Neville?
So, kind of first question, you talk about unit cost, long run marginal cost. What would you be expecting to sell those stations at? I mean, looking at the sort of the more commercial end of your C&I contracts, sort of around $66 a megawatt hour. And you're talking about LRMCs in the mid-60s. What would you be expecting to be able to sell your output for new stations at?
Yeah, I mean, if you look at, you've got to take the ASX really. You know, if you think about the range of channels we have to market. You know, I still think that even with the recent prices we've seen in Australia for wind and solar, with a requirement to firm the supply, particularly with the deep storage needs in New Zealand, I still think the wholesale price at, you know, in the 70s is a reasonable assumption going forward. I don't think it materially lifts, and I don't think it materially falls.
Great, thanks. And a question, just so my understanding around the Te Huka expansion kind of opportunity, is that dependent first on more development at Tauhara, or for the capability through transmission, to effectively piggyback off capacity there?
Yeah, I mean, I can't. Is it 30 or 60 the first at Te Huka? Yeah, there's another. Yeah, there's another 30, which is just transmission. You can see the wells and the fluid are behind it. So that becomes pretty compelling at some point.
It's not standalone compelling without the transmission expansion? The expansion itself wouldn't just pay for itself?
Yeah.
So long run price for gas. You talk about $1.50.
John Kidd, do you want to answer that one?
So $7.50. Does that feel like a number where it might settle to you?
Well, there's a bit of noise at the moment. There's a large proportion of New Zealand's gas assets going under a completion process, from a sale. So I think that's creating a bit of noise. You've got an outage, which is creating a bit of noise. And then, of course, there's the whole political story, which I'm not sure is entirely related. I think you look through all of that noise and you go, methanol still sets the price. So oil's gone up, Kiwi's gone down, the net back to methanol is now higher than it was, and that'll set the gas price. So, I think we're moving $1.50. Paul?
Your comment on decommissioning, that would apply to TCC in terms of covering its own costs of winding it down?
Yeah, I mean, TCC is a bit different because the peakers are next door. So you could actually just turn it off and close the gate, and not do anything. But there's a shitload of copper in TCC, which is generally the most valuable thing you can strip out. Yeah, okay. So, yeah, I mean, so it's not, the storage costs are not that high. The site will still be there. So it would apply to TCC. It's not going to be like Otahu, where the value was, commercial land in Auckland. Although we did get 11 million, which we shared with the new owner of the site for the scrap at Otahu. So, you do get a return on it. You might be able to sell the whole plant. There's a lot of GT26s in the world, and there's a lot of them looking for spare parts. So, you can actually sell parts of the plant to operators of GT26s. But yeah, same sums apply. Neville again. Paul wants to get out and play golf. Come on.
I'll just throw one more on. Just in terms of the Wairaki decisions, and your slide there talked about the options. It's great. Yeah, the money
Whoa.
slide. Yeah, there
Fat
we go.
fingers
We'll get there.
attached to a fat head.
Aha.
There we go.
I'm just wondering how much is this makes it very much look like a commercial decision. How much are these choices dictated by the resource sort of consent conditions? Yeah, in other words, how the discharge consents, for example, whether or not that simply becomes a roadblock that eliminates, say your top two options.
Yeah, I mean, we don't think this is going to occur, but if there was a roadblock which says no discharges into the river, then you do end up with a bit more limited here and here. But even with these two, with this one, you can, sorry for the recording, for the repowering option, you could spend money on re-injection. So you don't necessarily have to discharge to the river at Wairaki, and in fact some of the Wairaki fluid is re-injected already. So other than maintain Wairaki A and B in its current configuration, with a roadblock of no more discharges to the river, the other three options are available to us. Now, this will take time to confirm, but increasingly we see that the loading that is now on the river relative to the last reconsent, which was 10 years ago, the loading is so much lighter now that it's more like the background conditions that the river would have observed before geothermal production was on the site. So, but yeah, if that roadblock was there, then the first one becomes, much less likely. But we don't see that roadblock.
And while we're on the subject, the sort of look like a linear declining trend in sort of total available production out of the fluid in the field. Was it the previous slide?
Yep.
Should we assume that decline continues out into the deep future?
No, you just have to drill. Yeah,
Right.
we know the field, we know the fluids there. You just have to drill to maintain it. So it's really just a capex phasing question.
Great, thank you.
Yeah. What that slide is trying to say is that, you've got 3% of New Zealand's electricity supply, which is low emissions, and it's proven, and we can see the fluid. So you'd have to be nuts to not let it continue operating. So that sort of tells the story that, at the highest level, there's a compelling case to extract that fluid and keep it going at that pace for a long time. Aaron?
I was just curious if you're willing to share, because I think you, James, mentioned sort of at least 250 megawatt for Tauhara. I just wondered if there was a range you were willing to share, if the consenting authorities would be willing to be cooperative.
Well, I'm happy to, you tell me if I'm wrong. The 250 megawatts is a function of the fluid.
Yeah.
So the consent is actually for the fluid extraction. And as we have worked with the consenting authorities on Wairaki, we've been able to expand and get more flexibility in our consent. So the equivalent story at Wairaki is 10 years ago our consent was 170 kilotons a day. We increased that to 245 kilotons a day, which allowed us to build Te Mihi. And then we got flexibility around that 245 such that we can peak at 280 kilotons a day. Now the current pull on Tauhara would be, how many tons a day would we have at the moment? So Tauhara is currently pulling 20 to 25,000 tons a day, consented for 213. If we are hitting our 213 kilotons a day in, I don't know, pick a time frame, 10 years time, and we get enough scientific data to tell us that you can do more, the history with the consenting authorities has been as long as you can prove that you can manage the resource sensibly and sustainably, then you'll get it extended. That's just the current consent.
And sorry, second question, just on Te Mihi third unit. So James, you spoke quite highly about the modular approach in Tauhara. Is there a modular potential in Te Mihi third unit, or is that sort of on or off your fourth alternative there, you know? So is there a scenario where you shut down or something Wairaki, focus on Tauhara instead, and then have a Te Mihi as a modular approach as well? Or?
Yeah, probably the best guidance I'll give you on that is that takes you into the Greenfield Wairaki option. So you're not doing a Te Mihi Unit 3 in its the way we think about it and in the base case and in the numbers Dennis just gave you for that unit. You're actually placing possibly 1, 2 other modules in the steam field near the resource that is lasting a lot longer than we expected. So you're just placing plant nearer to the resource probably in that scenario, creating that modularity in the same way.
Perhaps one of the ways to think about it as well, Aaron, is, you know, if we, you know, I think this is a crazy scenario, but, you know, one we could have, which is to let Wairaki, don't continue operations at Wairaki and one day in the future build the third unit. If demand is there, then we'd be spending on the next phases of Tauhara at 4 million a megawatt. That's less than 3 million a megawatt probably. So you'd probably still do Te Mihi third unit before you'd do the outer reaches of Tauhara in that world. I think the likely path, and that's why the band is quite wide, is that we do one of the lower cost options on Wairaki and Tauhara in due course. The scenario you've painted, I think, is, you know, it's obviously available to us, but I think if you MPV'd it, it wouldn't work. It's the dilemma with this chart, you know. Te Mihi, you'll see it. It's beautiful. It's efficient. The conversion rates are amazing. And then if you choose to go and walk around Wairaki this afternoon, you know, it's a different story. You know, it's a great plant, but you know, you can see the age difference. Andrew? What time do you need us out? Oh, yeah, last question then. Oh. We're around all afternoon, of course.
Yeah, just on the slide, I'm assuming the options A, B and C there are in essence are 80 megawatts, which is the same as Te Mihi Unit 3, just due to the field constraints.
Well, A and B would actually still be that 100 and...
Yeah, you go for 110.
Well, we've got 120 installed at Wairaki, 130. And the reason we would keep that capacity in, because this repowering option is repowering on the current skids. It's not taking it all out and sticking in a 90 megawatts. It's refurbishing, really. Because then you that great slide Mike showed you of how we can move production around to maximise the fluid take. Those two options would give us that continued potential. So you'd probably refurbish, repower at the same megawatts.
And C?
C, don't know. I mean, that's a... So anything's open to us, really, on that one. I like A. Of course. Which is the trade we're trying to show here. You know, we showed you the Wairaki ongoing cash costs of $14, but that's Wairaki plant and Te Mihi plant and Pahipi plant, and there's an order there. Te Mihi would be by far the cheapest on an ongoing cash cost basis to run. Okay, so last question. Do we need to give instructions now, or is it... Oh, we're having lunch. Okay. So, thank you all. Like I say, we're all around this afternoon, so you see us on various tours. Questions come to mind, happy to answer. Thanks for the team. I thought that was, I'm sure you agree, it was, you know, fascinating unveil of our geothermal world and the options available to us. So enjoy your lunch and enjoy the tour. Thank you all.